We're live here, we're there, here, there live, here live, we're live everywhere. All right. Good afternoon, everyone. This is Roman Shersher, your #1 online resource for buying property, with this week's Buy, Invest, Sell update. Broker's formula for real estate success. It's September 19th. Got a lot to go over. We had a great week. Why? The Fed finally lowered the rates. Dropped a quarter points. It was a quarter point. It was expected, of course, and the market didn't really move. Actually, surprisingly, the market interest rate went up. Why? Because it dropped in anticipation of this rate drop. And so that was kind of expected as well. Not surprising to those that understand the market and understand what's going on. This has happened before. But let's go ahead and get into our update. Please, guys, if you like this video, share it on social. Please tap the share button. Send it to your friends and family. Really helps get the word out. Our views are increasing significantly. I appreciate you spending the time to educate yourself on the local real estate market here in Southern California, with a little bit of tidbits that I drop in about Jacksonville, Florida, that we also do some business in. And remember, head over to Facebook or YouTube after this to see the links to the slides and the content that we use. I don't bring you opinion. I let you know when I'm using my opinion, but all of this is based on raw data that's going on in the market. I can't tell you how many times people have told me, the market's going to crash. We're going to lose 50% of our value. It's never happened. Prices have continued to go up, even with high interest rates, even with COVID and everything. It's continued to increase. Real estate does that for those that know and have been in this market for a long time. All right. Also, I've bought at this point hundreds of homes between Jacksonville and California. And I wrote a book with free tips and tricks on how to make money, save money when purchasing, but also how to win the offer. Especially here in California, where sometimes the market gets to 15 offers. It's hard to win with 15 offers, to be honest with you, if you're not the highest or close to the top. But when there's a few offers, or when you're right up there, when you're in the race, my tips and tricks can get you over the top. So hit me up on social media, DM me, text me, send a messenger pigeon, do whatever you want. Let me know you want it, and I'll gladly send you the email with the book. No obligation. My pleasure. All right, current projects. I'm going to bring in my lovely partner and wife, Liana, to tell you a little bit about what's going on and what the projects are that we have in the market right now.
Hello, everyone. So in terms of current projects here in Los Angeles, as Roman just shared, interest rates have been going down since the 7% that we're at a couple months ago. So that really kicked into gear the market, and both of our listings that we had up for a few months now were in multiple offers and just opened escrow on both of them, the condo in Beverly Hills and the townhouse in Tarzana. However, anything could happen, so we're still open for backups. If you'd like to see them, there still could be a chance, so please reach out on those two.
Beautiful condos.
Yes.
Both of them.
And then in Jacksonville, where we do most of our investing and hold rentals, we have an awesome 4-bedroom, 2-bath property that should be finished up with renovations in about 2 weeks. I think we're getting staging in next week.
We're going live next week, next Friday.
Next Friday. So we're getting staging in, doing the finishing touches. That's going to be a great one. That's our Jacksonville flip in 32205 zip code. Great for an end user or a turnkey rental. So let us know.
It's on a cul-de-sac. Beautiful home.
Interested in that.
Now it is, at least.
Okay, and then moving to our neighborhood spotlight. This week we are spotlighting Calabasas. So I always like to do a little history of the town and then get into the food scene with my culinary background. So in terms of the history of Calabasas, fun little story there. Basically, Calabasas comes from the Spanish word pumpkin. or gourd. So according to a local legend,
Pumpkin.
a rancher's wagon spilled a load of pumpkins in that area, and then the next spring, because of the seeds and all that stuff from the pumpkins, hundreds of pumpkins started growing and built its first own pumpkin patch. So Calabasas literally means pumpkin in Spanish, so giving it its name Calabasas. The area itself has roots going back to the Chumash people, and it then became part of the Spanish and Mexican ranchos in the 18th and 19th centuries. And then Calabasas officially incorporated as a city in 1991. So it's one of the fairly newer cities here in Los Angeles County, but one with very deep roots, literally. From pumpkins to gated communities.
And sushi restaurants. And lots of sushi restaurants. Some of the best sushi.
Don't give it away yet.
Oh,
so
I'm sorry.
The next segment is on the culinary, my favorite part. So in terms of lifestyle and things to do, the Commons at Calabasas, that's the main hub with restaurants, shopping, movie theater, and yes, celebrity sightings quite often. And the food scene is buzzing. It's really picking up. Great new additions. Number one, Superba Food and Bread. That's a new opening at the Calabasas Commons. I used to go there when I was in culinary school, actually, in Pasadena. So that's a fun place. It's a hit in Venice, Hollywood. There's multiple locations all throughout the city. Think pastries, all-day brunch, coastal California cuisine. So definitely check that out. And then Yume, that one's exciting. That's a Studio City location that's really small. And it's always packed. So this one, they just opened Calabasas a few months ago. It's a larger, more upscale version. We were just there a few weeks ago. Very modern Japanese dining, great drinks. So that's a really great spot to check out for date night or
Beautiful
friends.
remodel.
Yes.
Very high-end remodel inside.
Yep. And then, of course, gotta mention the OG Shibuya. If you haven't been, it's one of the top-rated sushi restaurants in all of Los Angeles County by both myself and my fellow food critics and professional food bloggers. Nothing beats Shibuya in the valley on Ventura Boulevard, Sushi Row. Shibuya is the OG. And insider scoop, you guys, not a lot of people know this yet, but they are rumored to be opening up a second location soon. So does that mean shorter wait times or longer wait times? We don't know, but see. Definitely check it out.
The wait times are significant, though. If you're not there before they open and get first seating, you're waiting a long time.
Yep. And then I did want to mention one more thing about Calabasas in particular, just on the real estate aspect. The beauty of Calabasas is you get to be part of the Las Virgenes School District.
Yes.
It's a great school district. You know, LAUSD has some pros and cons with it always, but Las Virgenes School District, if you're in Calabasas, that's a great way to go.
Yeah. Some of the top schools are in the Las Virgenes School District, which goes from Woodland Hills, the border of Woodland Hills, Calabasas, all the way, I think, to what, Westlake?
Yeah.
Westlake Agoura. So all those schools are very highly rated within Southern California. All right. Thank you for that local spotlight. Shibuya. Yeah.
My pleasure.
Check
it out.
All right. Let's get into our content. All right. We are seeing that before we get into that, California Association of Realtors came out with a housing market update and what their expectations of forecast for the upcoming year in 2026. There was a recent, this week there was a California Association of Realtors, it's called Reimagine, where real estate industry gets together, and C.A.R came to speak at that, and they spoke about what they expect in the upcoming year. So in the upcoming year, they're expecting California sales to increase 2% to 274,400, which is still a very, very low number. We were at over 400,000 transactions per year just a couple of years ago. They expect our median price to increase. Our median price across California will increase approximately 3.6%, according to California Association of Realtors. And the affordability index, which is very low, it's at 17%. What that means, the affordability index, is the percentage of people who can afford to buy a median price home in the area that they're in. Okay, so right now we're very low. That means only 17% of the people living within a little metro area can afford to buy the median price home in that metro area. And so they expect that this will inch up, will go up from 17, so more people can afford to buy within that area as the interest rates drift down toward and perhaps surpass 6% next year. Okay, fall below 6% next year. So we'll see how that's going to happen, what's going to happen there. But that's what they're forecasting from California Association of Realtors. What's happening currently? Well, home sales and profits are still up. Okay, I can't tell you how many people told me when interest rates started rising because of inflation that, whoa, prices are going to get slashed. Everything is going to go and dump. We're going to lose 40-50% of our value in California. Never happened. And as you just heard, California Association of Realtors is predicting 3.6% increase again next year. That's so if you have $1 million home, you're increasing $36,000 just in value, just holding that property. If you average that out, that's $3,000 per month that you're increasing in value. That pays to own, not rent. A rent, you're paying for someone else to enjoy that value increase. But profits are up, and so typical resale profits are about 50%. Gains are up a touch under 2024 levels, but they're still on the very high side. So right now what we're seeing is that, here, let me give you a better one. Here we go. That sellers are making near record gains from their home sales. So right now, typical pocketing of cash for homeowners is about $350,000 from the sale of their homes. This is a 2.2% drop from the record high of $358,000, but it's up 2.8% from last year of $340,500. So last year actually we were a little bit lower. Of course, prices have gone up this year, and so majority of people increased by an average of 2.8% the amount of profit they took home this year. Now, 95% of all sellers made a net gain from selling their home. That's how much equity is built into our market. And when people talk about foreclosures, price drops, everything, it's hard to get. There have not been historically significant price drops in the market without a good sizable amount of foreclosures. And there's just too much equity out there. People aren't getting foreclosed on unless you're bought in the last year or two, and you lost income, you lost your job, whatever. It's not a systemic foreclosure period or process right now because there's just not a lot of them out there. Now, foreclosures are ticking up slightly as incomes fall and prices are still very high, but we're not seeing that as a major factor in increasing the foreclosure number significantly. With still a very low number, like 0.6% of all loans are some form of default. And you have to have that in order to see really big price drops in home values in California. Okay. All right. Lastly, let's go ahead into our mortgage rates. Where are our mortgages today? Well, as I mentioned, finally the Fed dropped the rate by a quarter point this week on Wednesday in particular. Now there was a significant drop in the last 2 months. We went from 7.15 down to as low as 6.27 as of Thursday of last week before the interest rates. And so before the interest rate dropped by the Fed. And so on the day that the Fed dropped the rate, it was built into the rate that were being offered to mortgages. When the quarter point announcement occurred, mortgage rates went up. What? How does that make any sense? Well, like I said, it was already built into the rate. The anticipation already dropped the interest rate in the mortgage market. So it climbed and has since come down even a little bit off of that. So last week when we did our update, the 30-year fix was at 6.29. It went up higher than that, and now significantly higher than that. I think it went up like 15 basis points the day the announcement occurred. It is now down to 6.35, so we're up only 6 basis points since last week. The 30-year fixed was 5.72. It is now 5.9. The 30-year FHA was 6.6%. It is now 6.03. The jumbo was 6.25. It is now 6.28, so still close and surprisingly less than the regular fixed. That's not common, not typical. And the VA was at 6.01. It is now at 6.05%. So the takeaway is this: look, we had a mild midweek bump in most loans, loan types. Affordability is still manageable when you stack seller credits, when buy downs, and you shop aggressively, okay? Today, these are not the rates necessarily you're going to get if you buy a house. The amount of credits and what I'm getting from my buyers right now, I get them tremendous deals, and a lot of them we're getting the seller to pay for a rate buy down. What is that? That means that for the first year or two, you're going to pay significantly less than this market rate. Imagine you could buy a home right now for 5.5% or 5% interest. Worth it? Give me a call. Let's talk. I'm also getting a lot of seller credits, and we're shopping very aggressively, especially for the homes that have been on the market for a little while. Like I mentioned, homes have equity right now. So you get the right seller, you understand the motivation of the seller, you know how to negotiate with that seller. Sometimes terms are way more important than price. So if you know what you're doing and know how to negotiate this, I'm getting phenomenal deals for my clients, okay? $100,000 below appraised value, $80,000 credits, the largest I've ever seen, I've ever done, but routinely we're getting anywhere from $25,000 to $45,000 in credits for our clients for things that need to be done, which they can use. They can kick the can down the road, use it right now to pay down their costs, do whatever. And so when you take all these things and you stack all these benefits of buying right now, you're getting a good deal, and the affordability number is a lot higher. Okay. Now, what we have seen in the last couple of weeks, I've seen a lot more people come to the market. There's been this pent-up demand that's been sitting on the sidelines. Buyers have not been out, and they've been waiting for these rates to fall, and now they've fallen significantly. They've fallen almost a whole point in the last 2 months. And as a result, we're seeing buyers hit the market. What's going to happen in 6 months when the rate is another 0.5 point lower and you have a ton of buyers making 10 offers on each house? You think I'm going to be able to get these credits? It's going to be much harder, that's for sure. Depends on the house, of course, but it's going to be much harder. All right, let's get to our quote of the week. Awesome. All right, Franklin D. Roosevelt, FDR. 32nd U.S. president, led this country through the Great Depression and World War II. His quote is this: "Real estate cannot be lost or stolen, nor can it be carried away." What does that mean? Well, property is durable. It's durable wealth, okay? In volatile times, the strategy is very steady, regardless of what's happening in finance. Stock market's dropping 20% in one day. Real estate market is steady and is a steady wealth builder. Finance smart. Let time do the compounding on your real estate wealth. Great advice by FDR. All right, so this week's takeaway, number one, equity cushions. There's a lot of equity out there. Let's take advantage of it if you're a buyer. Realistic pricing keeps deals alive. Those sellers that are trying to put their properties on the market right now at yesteryear's price, it's just going to sit. There's no point. 15% of all properties, all listings have gotten delisted because these same sellers tried to put their foot in the water. I want 100,000 more than it's worth, and it didn't work. It just ran their agent ragged, and they left with a bad taste in the mouth. Okay, please, there's tremendous opportunities out there, and it's not going to last long. So if you can, share this with someone who's house hunting or thinking about selling. DM me, reach out. The negotiating that we're getting done right now is fantastic. I'm getting a lot more stuff than I've ever been able well, than I have been able to get in many months because of this market. All right. Thank you, everyone, for joining us. I appreciate your time. This is Roman Shersher, your #1 online resource for buying property. Have a good day.